And the thing is, when you're house hacking and you plan to rent it out after, you're able to pay more than the flippers and still get a great deal. Even though you're only putting 3 or 5% down and they're making cash offers. The reason why you're able to pay more, let's talk about multifamily versus single family real estate. And we're gonna tackle this from a beginner's perspective, somebody who wants to get started in real estate investing, and they wanna know which one should they start with. When it comes to the perspective of cash flow, multifamily is gonna take the cake. You're gonna be able to get a higher amount of cash flow with a duplex or a fourplex than you would with a single family house or a condo or a townhome. But let's look at it from a beginner's perspective, because as a beginner, you're probably not going to be putting 25% down. You're probably going to be looking to house hack or bank hack, which is where you only put 3 or 5% down and you live in the property for a year and then you rent it out, right? It's just an easier way to get started. You don't have to come up with as much money right out of your pocket at the beginning, and it's easy to turn it into a rental after 1 year. But if you're only putting 3 or 5% down, when you go to rent it out, your cash flow is probably not going to be that high. Probably be around, at least in Florida, in my area, like $250. Now, let's say you bought a single family house instead for that same purchase price. And then after a year of living there, you go to rent it out, you'd probably only cash flow $150. And I'm talking about, after all your expenses, your property manager, setting aside money for reserves, all of that. So you've got a $100 difference. But at the end of the day, $250 really isn't going to make that much of a difference. It's not going to change your life. So here's why, in some cases, single family may be a better option. If you're looking to get a good deal on your property, it's easier to do that with single family. Let me show you what I mean. Look at this here. You guys see this window? And this cracking right here, and it's all coming apart. And I want to show you guys also too, these stains over here. Look at these stains, and look at this step cracking going on by the bottom of the window. And look at the ungrown forest I got going over there by the trees. This is just as you're walking up to the front door of the property. This isn't even what the inside looked like when I first bought it. Those kind of things right there are going to scare away the average home buyer. So let me break down for you the percentage of home buyers in residential real estate, how they break out. 89% of buyers are just your regular homeowners. They're buying a home to live in it. 11% are investors. So your regular homeowner, 89% of the market, your competition is gone. They don't even want this property. It's too scary. They don't want to deal with it, which eliminates so much competition. Now you just have to deal with 11%, most of which are flippers when it comes to single family real estate. And the thing is, when you're house hacking and you plan to rent it out after, you're able to pay more than the flippers and still get a great deal. Even though you're only putting 3 or 5% down and they're making cash offers. The reason why you're able to pay more is because you're not going to over improve your property. Not to say that you're going to be a slumlord and not renovate the property. You're going to make it look nice, you're going to update it and make sure all the systems work. But you're just not going to over improve it. So let me give you an example. When it comes down to the kitchen, instead of replacing the cabinets like you would do for a flip, you're just going to paint the cabinets. Instead of putting up a backsplash in the kitchen, you're going to leave the walls and just paint the walls. When it comes down to the bathrooms, instead of replacing the tile, you're just going to reglaze the tile. So what I'm trying to say is you're still going to make your property look nice, but you're not going to make it flip level. And so you're not going to spend as much money as a flipper. And you don't have selling costs. So you're able to get into the property and spend a lot less than they are, so you're able to pay more than them and still make just about as much as the flippers are making, allowing you to get a good deal. So why would I say a good deal is maybe more important than cash flow when you're starting off? Well, because we looked at the cash flow and we saw that $250 a month isn't really going to be a game changer. You're going to need a lot of those, and it's going to take a while for you to save up again for another down payment to get another one, even if you are pocketing that $250 a month. But by buying a house like this, below market value, by paying just a little bit more than the flipper would, I just increased my net worth so much more. But who cares about net worth, right? This is why I cared about net worth and why I chose a single family to start with. Because now I can get a home equity line of credit, and I can use that home equity line of credit to buy another property below market value. So what I'm now able to do is leverage these properties to buy more properties. And then as I buy more properties, I can end up cashing all out and going into commercial and getting cash flow, or I can sell some properties to pay off the other properties and now I don't have a mortgage payment and my cash flow shoots up. So as you increase your net worth, it becomes very easy to get cash flow. I can sell all my properties and go into dividend paying stocks, right? But you need a lot of money in dividend paying stocks to make the cash flow worth it. You need like $1 million. So if I can increase my net worth, the cash flow options will all appear. Now let's look at a scenario. Why can't I just buy a fixer-upper in multifamily and do the same thing? Well, when it comes to multifamily, most of your buyers aren't your regular homeowners looking for that, white picket fence with their kids and the dog. It's mostly investors, or it's someone looking to house hack. And so when they see a scary house like this, they're not scared. It doesn't scare them away. They're fine with that. And so you have more competition. And the other thing is, the investors aren't necessarily looking to flip the duplex or the fourplex. They're looking to rent it out. So they're on the same playing field as you. So they're going to spend spend the same amount as you, and they don't have selling costs this time. And they're probably going to put more money down. So their offer is going to look better than yours. So you're going to have to pay more than them to beat them out. So it's a lot harder to get a good deal in multifamily. But here's another pro though to multifamily over single family. When you're buying it for your first time and you're going to live in the property, multifamily is going to be way easier to house hack. It's just a lot easier to rent out another unit and to not have to share your living space with some random strangers. It's easier if you got to go through an eviction process and kick them out than to try to kick someone out who lives across the hall from you. So if you live with a family and you have kids or you have a wife or a girlfriend, house hacking single family might not even be an option for you. And so house hacking multifamily is going to allow you to keep your payments lower or maybe even almost live for free, which you could do in single family if you rented out all the rooms, but again, it's kind of a pain in the butt. So multifamily is a little bit better in that sense. But here's again where single family beats out multifamily. After that year of living there, when you go to rent the property out, you're going, most of the time, this is just a generalization, not an absolute, but most of the time, you're going to find better quality tenants when it comes to single family homes like in this neighborhood. And the reason why is because most of the time, multifamily is not in the most desirable location. They tend to be on busy streets or in worse off neighborhoods where maybe the crime rate's a little bit higher. So you're more likely to get unqualified tenants or less qualified tenants. Maybe people who have a lower credit score, people who maybe have a lower income or not, maybe have a criminal record. And it's not to say that they can't make great tenants. It's just, it increases the probability and the odds that maybe you'll find a bad tenant, that you'll end up having to deal with late payments or them wrecking your property or an eviction. Not all the time, you can still find great tenants in these areas. You're just increasing your probability of that happening. Whereas opposed to in a single family, again, not to say that you won't find a crappy tenant in here that's going to do the same thing, but you have a higher chance, higher probability of getting a more qualified tenant. So you have a higher pool to select from. And generally in single family, the tenants stay longer. So while you may say, oh, well, in multifamily though, I only have to worry about one roof and I have 5 tenants, 5 renters, five units, as opposed to now you got to go buy 5 houses and you got 5 roofs to replace and 5 ACs to replace. Yeah, but you also have less expenses when it comes to single family in the terms of turnover. And turnover can be expensive. Turnover means every time the lease ends and they move out. Generally in multifamily, it tends to be like every 1.5 years, they move out on average. Whereas single family, your tenants usually stay for about 3 to 5 years. So you have less turnover. Every time they move out, you've got to touch it up again, repaint. There's a couple weeks that are going by where you're not getting any rental payments. So single family, you have less turnover, less stress, less headache. Single family is going to be a lot easier if you're working a full-time job and you want something that's more passive, something that's, they're not calling you at 3 in the morning for toilets. You don't have 5 people calling you. You got 1. You've got less. And again, the goal here, the way I look at it when it comes to residential, isn't so much so to get the cash flow, it's to build up the net worth so that I can then convert into cash flow however I so choose once I get to that point. But I would not say that I'm against multifamily and that I wouldn't start with multifamily. I absolutely would. If I found a good multifamily deal, I would. I would buy it. Part of the reason why I didn't is because in Orlando, Florida, there's just not that many duplexes and fourplexes and triplexes. There's not a lot. Most of them are in bad areas, they're in the ghettos, or the ones that are in the really good areas, because there are a few, are so expensive. They're even more expensive than the single family houses. They have a premium on them, and they have even less cash flow than I would get here, and they cost even more than I would have to pay for a single family home. So that's why I bought single family for my first one. But that doesn't mean if I didn't find a good multifamily deal that I wouldn't buy it. And the other thing to keep in mind is that multifamily is valued differently than single family. Meaning the value of this house goes up because I made it look nice, and that's it. Multifamily isn't valued on how nice a place looks. It's valued on what is the gross income? How much do they rent for? So don't get that confused just because you went in there and you fixed up a multifamily and it becomes worth more. Really the way it works is the rents increased, and that's why the multifamily is worth more. Maybe you had to go in there and fix the property up, right, and renovate it to increase the rents, but that's not what made it worth more. Not fixing it up didn't do it. Renovating the rent or increasing the rents did. You just had to renovate it in order to increase the rent. See, that's the difference. So when you're looking for a deal in multifamily, you don't need to always necessarily look for something that needs fixing up. Look for something that's maybe already fixed up that you can, that's maybe just below market value in rents, and you can just increase the rents. Or if you are going to find something that's fixed up, make sure that you're getting it significantly below market value, that when you fix it up, it's for less than what it's going to be worth once you're able to get full maximum rents. But you're gonna kind of calculate these different. You're gonna calculate them like commercial real estate. But yeah, I think single family also has a little bit of a higher appreciation rate than multifamily. But again, if you're getting into multifamily in a really good area, you can also see really good appreciation at the end of the day. But all that really matters at the end of the day is that you get into real estate. And I think bank hacking and house hacking is great, whichever method you decide to go with, multifamily or single family real estate. If you guys like this video, give it a thumbs up. If you guys want to see more content like this, subscribe. And if you know anyone else who's wondering whether they should get multifamily or single family, share this video with them. Thanks.